Hello viewers, in this video we are going to do two problems on marginal costing, and then we are going to see the meaning of the limiting factors. Hope you can view this slide, right? So all of you please look at this problem. From the following data, calculate break-even point expressed in terms of units and also the new break-even point if the selling price is reduced by 10%. Please take a screenshot of this question. Fixed expenses, depreciation, salaries. Both depreciation and salaries comes under the fixed cost. Variable expenses, that is variable cost. Materials rupees 3 per unit, labor rupees 2 per unit, selling price rupees 10 per unit. So by considering this data, we are going to calculate the old break-even point in units as well as the new break-even point in units. What do you mean by new break-even point? The selling price is reduced by 10%, then on that basis, we have to calculate the new break-even point. Okay, fine. Now, calculation of break-even point in units. Okay, fine. Now, so here, what is the formula for break-even point? Now the selling price is 10 rupees per unit only. So it has not been reduced. So what is the formula? If break-even point in units, BEP in units, fixed cost divided by contribution per unit. Fixed cost divided by contribution per unit. Now, what fixed cost means? Depreciation and salaries. Okay. Now, fixed cost or expenses all are one and the same. As far as this particular problem is concerned, fixed cost includes depreciation plus salaries. Depreciation 1 lakh, salary 1 lakh. That's all. That is 1 lakh, salary 1 lakh. 1 lakh plus 1 lakh, 2 lakhs is the fixed cost. Now, contribution per unit. Selling price per unit. Formula, first you write up the formula. Minus variable cost per unit. Now, what is the selling price per unit? Rupees 10 minus what is the variable cost per unit? Materials, labor, both includes the variable cost. Material of rupees 3 per unit and labor of rupees 2 per unit. Both includes the variable cost. 3 plus 2. 10 minus 5. That's all. Understood? Now, substitute here. Fixed cost that we have calculated divided by 5. Break even point in units 2 lakhs by 5. 40,000 units. 40,000 units. Break-even point in units, 40,000 units. So this is old break-even point. So if selling price is reduced by 10%, in second case, if the selling price is reduced by 10%, what is the actual selling price per unit? Rupees 10 per unit. What is the actual selling price per unit? Rupees 10. If it is reduced by 10%, 10 into 10 minus 10 minus 10 into 10 by 100. 0, 0 cancel. 0. 10 minus 1 is equal to rupees 9 per. So new selling price per unit is equal to rupees 9 per unit. Okay. Now, new break-even point in units is equal to fixed cost divided by contribution per unit. If you calculate the break-even point in units, your formula will be fixed cost divided by contribution per unit. If you calculate the break-even points in values, then your formula will be fixed cost divided by PV ratio. Please make a note of this. Now, fixed cost, the old fixed cost value only, there is no doubt about that. Okay. But contribution per unit, we have to calculate here. Now, contribution per unit is equal to selling price per unit minus variable cost per unit. Now, the old selling price was 10 rupees per unit. The new selling price is rupees 9 per unit. 9 minus variable cost 5 only. 3 plus 2, 5 only. Okay, there is no change in the variable cost. There is a change only in the selling price. So, rupees 4 per unit. Okay, now substitute here. Okay, how much? 2 lakhs by 4, 50,000 units. New break-even point in units is 50,000 units. Old break-even point in units is 40,000 units. Okay. So if you reduce the selling price means you can produce your break-even point in units. You can sell 50,000 units. If you reduce the selling price, you can sell 50,000 units. If you sell more units means you can get more profits also. Okay. If the cost reduces, the cost decreases, demand increases. Inverse relationship. Fine. If you want, you can see the workings also for a while. I'll take a screenshot of this working also. Fine. The next one more problem is there. You see, the following data relate to XYZ company. This is somewhat different. Normal capacity 40,000 units per month. Variable cost per unit rupees 10 per unit. And then actual production 44,000 units. Sales nil. Fixed manufacturing overheads rupees 1 lakh per month. Or rupees 2 rupees 50 paisa per unit at normal capacity, whichever is less. Other fixed expenses 8,000. You are required to prepare income statement under marginal costing. Please take a screenshot of this question. Now, please put the heading as income statement under marginal costing. Serial number, particulars, amount, rupees, amount, fine. Now, here we are going to calculate the variable cost and the fixed cost. Now, actual production is 44 units. Okay. Now, variable cost. Actual production is 44,000 units. Normal capacity is 40,000 units per month. Now, you have to calculate the variable cost on the basis of the actual production only. Okay. Say that is actually here they have given a data relating to the sales. Now, sales nil. Sales nil. The second one is cost. Cost consists of variable cost and fixed cost. First, we are going to calculate the variable cost. As far as variable cost is concerned, it should have to be calculated based on the actual production. Actual production is 44,000 units into variable cost per unit rupees 10. Rupees 10 per unit. 44,000 into 10, 4 lakhs 40,000. That's all. And then the next one here is fixed cost. Now, fixed manufacturing overhead 1 lakh per month or 2 rupees 50 paisa per unit at normal capacity, whichever is less. Okay. So you see the condition here. Fixed cost, as far as this particular problem is concerned, fixed cost consists of fixed manufacturing overheads and other fixed expenses, 8,000. So here, as far as fixed manufacturing overhead is concerned, I mean, as far as fixed cost is concerned, fixed manufacturing overhead of 1 lakh rupees per month or rupees 2 rupees 50 paisa per unit at normal capacity, whichever is less. See, when you take, you see, fixed manufacturing overhead, that is 1 lakh per month. 1 lakh per month means 1 lakh into 12. Okay, 12 lakhs. Or 2 rupees 50 paisa per unit at normal capacity. Normal capacity is 40,000 units per month. Okay. Now 40,000 into 2 rupees 50 paisa. That is 1 lakh. Whichever is, I mean, here you need not calculate it for per month. You need not calculate it for per month. Okay. Both are per month only. So both are same only. You can take any one. Both are same only. You can take any one. So I am taking uh 1 lakh. Can take any one because both are same only. Okay. Now, so the next one, other fixed expenses. Other fixed expenses. 8,000. 8,000. So 1 lakh plus 8,000. 1 lakh 8,000. Now, variable cost 4 lakh 40,000. Fixed cost 1 lakh 8,000. Then what is the total cost? 0.000845 lakhs 48,000 is the total cost. Sales is nil only. Okay. Total cost is 5 lakhs 48,000. So this is what is the income statement. Since there is no sale, so we cannot consider this as an income. We can rather consider this as the cost of expenditure. So this problem you can expect in the examination. And then another piece of information, while you are calculating here, you need not calculate in terms of, you cannot calculate it for 1 year because both information they have given only for 1 year. So you calculate it on monthly basis itself. 1 lakh, 1 lakh. So both are same only. You can take any 1 lakh. Okay. Fine. Thank you. And then you can even work out this problem. You can take a screenshot of this problem. You can even work out this problem and give me the answer in the comment box. A manufacturing company shows the trading results for 2 periods. Period 1, period 2, sales net profit. They have given for both the periods. Ascertain PV ratio, fixed cost, break-even point. Please calculate this and give me the answer in the comment box. Okay. Now, finally, we are going to, before winding up, we are going to discuss about the meaning of key factor. The other name of the key factor is limiting factor. Key means what? Something important. So, something crucial. something sensitive, okay, something crucial, something you have to consider is as a, what to say, siren, okay. So the other name of the key factor is limiting factors. Some limitations are there. You have to be very careful. Certain factors you have to consider if you want to become a good businessman, right? So you have to be very careful while handling certain factors, right? Fine. Key factor. The other name of the key factor is limiting factor. Any factor concerned with the production or sales, which in limit on the production or sales can be a limiting factors. So any factor which can limit the production capacity or the selling capacity of the products. So that is what is called as limiting factors. Now, so the other name of the limiting factor, as I told earlier, it is a key factor. It can be of any of the following. Sales potentials may be limited. Why the sales potentials may be limited? Why? If you are not creating the demand for the product means, how can you push the product to the hands of the consumer? Sales potentials may be very limited. So here you have produced many number of products, and then your products are ready for the sale to the customers. But where are the salesmen? So you have to create the demand for the product. So you have very good trained salesman in your organization for help for in order to help the organization. Okay. In addition to that, you have you want to sell the product to the consumer. So you have to create the advertisement. That is very important. So if you are not promoting the product to the consumers, so consumers are large in numbers. Consumers are scattered across the nation, across the world. So consumers who are living nook and corner of the world means, how can you reach those consumers? Only through the advertisement. Okay, only through the efficient salespeople, trained salespeople. So if these resources are scarce means, automatically the sales potential also will be limited, and then production capacity may be limited. So if you are not having, if you are not keeping the machinery in good condition means, how the production capacity will be high. And then if you are not selecting the efficient worker into your manufacturing sector, even though if you have selected the workers, and then if you are not giving proper training for your workers, then how they will be able to contribute to the towards the best of the organization, right? So production's capacity may be limited. So if the raw materials are not in good condition, so if the raw materials are in very short supply, so the machineries are not in good condition, so if the efficient product employees are not working in the organization, so these are all the problems. These are all the reasons for which the production capacity may be limited. And then raw materials may be in short supply. There may be heavy demand for the product, but if the raw materials are in very short supply means, how you can meet the demand of the consumer? It is highly impossible, right? And then finance may be limited. Needless to say, doubtless to say, finance is the blood, blood of the business. So without finance, how the business can survive? So here, not only finance. So here, even though if you have finance with you also, you have to apply your mind how to invest, where to invest, when to invest, in what asset that you want to invest. You have to be very careful in using the money. Okay. So if you are not the prudent investor means, then it will be again a problem for you. Okay. Fine. And then you have a lot of opportunities to get the loan. You can get the loan from the bank. You can get the if you want to start any business means, you can get the finance from different aspects like that. So here, as long as finance, you are having the sufficient finance means, you can start the business, and then you can run the business to the maximum extent. Okay. So these are all the factors, limiting factors. Limiting factors means which reduces your what to say, sales potentiality. So reduces, which may slow down your business. So you have to be very careful while considering these factors. Okay. So sales potentials may be limited, production capacity may be limited, raw materials may be in short supply, finance may be limited. These are all the very, very important resources to your organization in order to promote the sale, in order to expand your business, diversify your business, and so on. Okay, fine. Thank you. If you have any doubt, you can put it in the comments box. And then kindly view the videos and subscribe all my channels. I'll be doing more videos in future. Thank you for your patience listening.